Hello, everyone. Welcome back to the rationalinvestor.com. What is this? This is our daily brief of the daily brief. Whoa, it looks like we're on YouTube too. I do see my little head there, that icon right beside the screen. I wonder how the heck I'd get rid of that. What happens if I push this button? Boosh.
So you actually have to click that little arrow
Yeah,
icon
I think I
under
did
your.
that. It looks like there's a bit of a delay, so let's see if after a second or two it disappears. Come on, you can do it. You can do it. Obviously, everyone, this video is going to be a little bit longer. We're still trying to get used to using this particular platform to do these videos. So, you can always put me on 1x speed or whatever, 2x speed to try and get through it. Doesn't look like it got rid of those silly videos buttons, though. So we'll just try our best. Here we go. So we like to do maybe about 10-15 minutes here. Because this is sort of my first day back in the saddle and there's lots to talk about, it might be a little bit longer, but just bear with me. I think we can get a nice solid offering in here. So if you want to start your stopwatch, I think Alex now would be the best time to start the timer, okay?
All right.
Thank you, sir. And by the way, full disclosure, everybody, I'm working with Alex. You can see, I guess, his little AR icon there. And Alex rules. This guy is so awesome. Love working with him every day of the week. Okay, where do we want to begin? Once upon a time in a land far, far away, we talked lots about U.S. dollar index having to come into a significant pivot through that end of July FOMC meeting. I think before our big TRI meetup, but I think even while we were in the meetup, I talked a little bit about AB equals CDs. We originally had a very tight coil developing here, and the coil broke out to the upside. And interestingly enough, that breakout to the upside, if we AB equals CD that, you can actually see that they took the market right into that AB equals CD objective following the Fed announcement. So ironically enough, like trade-wise, price action-wise, not really anything new here. I don't know whether I really want to go into too much detail, but I did want to just quickly take a quick boo at some of the broader trends in the currencies. And interestingly enough, moving average relationships, the US dollar is still pointing up, people. That hasn't changed for me. And what I would just simply say is, we might be forming an empire here. We're going to have to wait for this week to finish. You can see there's a bit of a tail here now. And if we went through this tail, that's, today's Wednesday, so who knows what this is going to look like by the end of the week. But if we go through this low next week, my hunch is that's going to start forcing the fast moving averages to roll over and maybe we top out. Tough to say. But as long as the moving averages are pointing positively, the trend actually is still up in the US dollar index. Interesting too, the sort of rhetoric coming out of the Fed was this was, in their eyes, it was just sort of a mid-cycle check. And I think the stock market and the markets in general are feeling like, oh boy, there's going to be more interest rate hikes down the road, not less. That's sort of spilled over into things like bond market and stock market, which we'll talk about shortly. But I just wanted to take a quick boo at the currencies. US dollar index still pointing up. Euro, of course, we've talked lots about this recently. Can't buy a friend, negative interest rates, trends still pointing down. Interestingly enough, especially when we go look at the gold, I often talk lots about the gold and the yen moving in conjunction. So we see the yen breaking out to new highs again. So that's just validating that thesis. And I remember long periods of time where you had the bonds, the yen, and the gold all moving up in unison. And also at that time, Apple, which was sort of a market darling, was also moving up. And they used to call it the ABC, Apple Gold's Bond, or something like that, ABG, something like that. Trade, I can't remember just off the top of my head. And I got a funny feeling, we might be in the back into that kind of environment where you have bonds, gold, yen, and the esoteric non-sort of cyclical names. At that time, it was Apple. I don't know what Apple looks like now. I haven't looked at it too much in earnest lately. Maybe it's Amazon this go around. Who knows? But anyway, long and short of it here, yen moving up egregiously. British pound, we talked lots about that recently. British pound just looks like a train wreck. And I might argue that, you can see nice head and shoulders top right off this spot level. I know we talked a lots about this in the past, and we actually have two AB equals CDs painting this 114 objective. I don't see any reason why that can't get hit. Interesting to see the commodity currencies themselves. Australian dollar just absolutely collapsing here. I noticed that the Chinese yuan also breaking violently down. Interesting that the Canadian dollar, with that recent strength in crude, was bucking the overall trend, but it sure looks like that these lows here are going to be tested in earnest. Let's see how the Canadian dollar does through this. And I suppose you could argue also too, Russia, another big oil proxy name, kind of getting beat up here just in the short term. Let's see whether these energy commodity proxies can hold on to their bulls. South Africa, obviously entirely gold related, which is very interesting because, Australian dollar typically is a metals play. So both the Australian dollar and the South African rand trending lower, breaking to new lows. Really, gold shouldn't be going up here. So very suspicious what's going on here. But, what do we say? Strong opinions loosely held. Markets can remain illogical far longer than any of us can remain solvent. Don't think it's a really good idea to step in front of the gold. We'll talk about that a little bit in just a moment. But really interesting to see that the metals commodity proxies are very, very weak right now. Okay, so back to the story. That's sort of our currency conversation. Clearly, the bull market is in the bonds. And interestingly enough, looking at some of our bond analysis, a couple things really jumping out at me of late. Don't know whether I don't have it on here. But yield curve getting very, very close to, where the hell is it? There it is. Getting very, very close to inversion. This is sort of what we needed to see to bring these longer rates down, is just an absolute collapse in yields. So you can see there's the Fed short-term interest rate sitting at about 2% right now, and the long-dated Treasury sitting at 2.18. So as soon as this inverts, then my hunch is all hell's going to break loose in the market. We've talked lots and lots and lots about how we're getting very, very close to the end of this cycle. This has been the sort of missing piece of the puzzle for me to actually start squawking about recession. Is that 36 U's? I don't think that's 36.
36, sir.
Inside joke, everybody, but that's funny. All right, so the point of the matter here, yields are absolutely collapsing, getting very close to our inversion. Hasn't come in yet. Gotta wait for it. Wait for it. Point that I would just make is the bonds. We actually had some fantastic, like, look at this euro bond. We had talked lots about this months and months ago about these long-term bond charts breaking out to the upside. Look at that beautiful, just beautiful double bottom breakout off an LJ, right off the bot level, trending higher, and really there's nothing to be done on this trade. Just don't touch it. Just made new highs, new stop to our trailing level just hit on this massive bot. So if anything, now you're just waiting, okay, where is market structure to start moving my stops up? But just such a good example of, the bond market is actually the big bull market right now. So go figure, right? Also, too, probably important to point out, it looks to me, especially with the fall in energy prices here, we actually have this inflation deflation gauge. This is a market-based gauge, and you can see that the inflation deflation gauge, now we're sitting 24.94. So we've cleanly gone through these old lows, meaning that deflation is still very much in control in the market. So there's a dangerous times we're living in here, folks. All right, let's keep moving this train forward. So, just a quick commentary on the bond market. Huge rally, huge bull market. Obviously, if the bonds are moving up egregiously, stocks usually in those kind of situations move down. And we talked lots about how dangerous this was starting to look. We had the sell in May and walk away. We had the June pivot, which was a little bit early, to be honest with you. Usually the stock market likes to pivot around the first or second week of July. In this particular case, of course, you can see they rallied it into that Fed meeting. As I said just a few minutes ago, the Fed basically came out and said that this was a mid-cycle easing and expect higher rates down the road. And so as a result, stocks really didn't like that. They wanted to hear some, we're done raising interest rates. But also, too, guys, I mean, is it ever a good idea for us to be just going and buying like up at the top of the market? Extremely dangerous. I might actually even argue in the short term that if we do silly things like reload zones, gee whiz, what a coincidence. You can see how basically all they did was they just backed the stock market up into a reload zone. Probably a little early for us to call bottoms, but you notice in previous spikes lower, the stocks do like to V bottom here. So don't be shocked. We've had the reload zone test. Don't be shocked if we just consolidate and then start working our way higher. You can see lots of gaps to the upside. So there's lots of back and forth to be done here. Moving on, obviously, the market that's caught a lot of people's attention of late is the gold. I was thinking before I went away for the TRI meetup and I did my move, I was actually thinking this was a rising wedge, which usually ends bearishly. But if anything, here's such a great analogy of strong opinions loosely held. Had you been hunting shorts off of this range and we break these highs, well, you just got to get out. I don't know whether we really had like 3 reasons to justify a short. I was just, and if anything, this is probably a little dangerous of sort of bias, because I look at this kind of market and I go, gee whiz, there's no way I can buy this. But the market says, I don't give a shit what you think, Brian. Woohoo, up we go. A little concerned though, writing on the walls, and maybe tomorrow's update, I'll take a look at the gold stocks themselves. The Australian dollar and the South African rand moving to new lows. That's not exactly what you want to see to be a gold bug. There are people on the site that are super hugely bullish of gold. I can't be a buyer here. It's so painful to watch, but I have to follow my plan, and I'm not allowed to chase. And I didn't get, the 3 higher lows bought setup sort of idea here. So for a guy like me, I just got to sort of sit in the sidelines and just wait and twiddle my thumbs. I will note though, and I do know like Mr. Renberg here helping me with the video, he pointed this out a while ago. And I think it's, it definitely needs to be acknowledged. It's definitely out there. You can clearly see how we have this massive, this is a monthly price chart, I mean, going way out. You can clearly see how we have this massive bullish bot that I think you can actually make the argument 1, 2, 3 higher lows, breakout through structure. This actually gives you the opportunity to front run the bot. Now that the 25 level is hit, you're like, woohoo, rock on. You can see where the move stop to scratch level is. That's simply just going to be a test of the old highs. If we rally up and test the old highs and crap out, well, you just walk away at scratch. But because you were able to front run the trade, you got in a little bit ahead of time. And that has an ultimate objective of $2,700 an ounce. So go figure. Markets can remain illogical far longer than any of us can remain solvent, all that kind of fun stuff. I'm certainly not going to be calling tops now that we've put in a new high here. But at the same time, too, I can't buy that here. It's just too much risk for a chicken shit like me. So we'll see how it goes. We'll keep an eye on it. For those people that did take this trade, rock on. Way to go. Kicking ass. Way to go. Awesome, awesome, awesome. And that's about all I can say about the gold right now. So keep your eyes peeled, folks. Might be some interesting times ahead in gold land. We'll finish off today with just a quick boo at the old corn. I think I talked a little bit about this, put tweets and stuff about it. I got to tell you, there's nothing better than putting together a big meetup of people that you've taught over the past few years. And then when they all come together, watching them all apply everything that I've taught everybody. And like literally at the meetup, it was incredible. I sat there, it was like, I think it was like last Wednesday, maybe a week ago. Well, actually, I can tell you exactly when I was. It was July 30th and 31st, right in there. So that was, how long ago was that? 30, oh yeah, so it's just almost exactly 1 week ago. We were sitting around. I can't remember where we were, but everybody was, hey, check out my setup. Hey, look at this long signal. Hey, look at this. Look at this. It was so cool to watch. And special hats off to Sin, of course, because Sin helped me build the good old DI algo as it's operating in its current form. Great signal from the algo. Sin, of course, all super stoked. And I got to hand it to Sin. I had like a nice simple 50% level objective. And of course, the algo, the way that I use it, I want to book at least partial profits on 2-to-1s. And then it went zipping up, hit Mountain Man, hit this trend line resistance, hit the top of value, and said, I think I'm done for now. Nice consolidation in here, considering the way gold's acting, the way yen's acting, the way the bonds are acting. We know that gold, yen, bonds, and Bitcoin to a certain degree are all highly correlated. Could this thing consolidate and get ready for another leg higher? Sure, absolutely. And what was really interesting when we were getting ready for this conversation, Alex and I, we pulled up, all right, well, let's go take a look at what's going on here off of something like the weekly or daily price charts. Probably daily is the best here. And I'm looking at Coinbase because we all know that Colleen doesn't trade anywhere else. And this video is just for Colleen. Just kidding. Love you, babe. You're awesome. We might have an LJ come in here. I would really like to see one more test. You can say I have one low, two lows. I'd really like to see a third low here. That would make me feel better. But for the time being, I'm just in watching the great. The phone call comes in here. Just a moment, everybody. Hello. Perfect timing, eh? But nonetheless, a guy coming in and working on my condo here is at the door waiting for me. So why don't we wind up the video with that. Beautiful little lower time frame long setup trade. And just like the gold, we might be setting up really big formations, taking us up much higher. I would personally like to see this consolidate a little bit more. Maybe we form a cute little bot in here that sets up the blast through this trend line. So we'll be watching this and commenting about it over the days ahead. And interestingly enough, this bot setup, if it does come in, is going to do nothing more than just test the old breakout highs. So all you Bitcoin bulls, of course, you're rooting for this. I still, again, a little bit early for me to get too excited here for that massive formation to come in. If we look at the lower time frames, I think the long setup came in, has hit some natural resistance levels, which make perfect sense. And what I'd like to see now here is a little bit of a consolidation to set up the break of the trend line, Leanne James, all that kind of stuff. The bullish bot setup to take us much higher. So we'll see how it goes. Only time will tell. So I hope you guys enjoyed that offering. I have no idea how long that was, but all the best and bye for now.